Okay, I think we get started now. We've got the majority of the attendees on board now, so yeah, let's crack into it. So welcome to today's webinar, which I believe is our first under the BetterCo banner. Nothing like a name and brand change during a national lockdown, but we got there, which is great. We know that many clients and colleagues are back to work under level 3 or are still very busy working from home. So we appreciate you taking the time out to attend this webinar. It sure has been a strange and challenging month or so, and it would be fair to say that we've all been on a steep learning curve to navigate our way through the information and support that is available to you, our clients. So we know that this is a webinar, so you can't see us, but we do want you to participate throughout the webinar by asking as many questions as possible. So in the side panel, you will see available a question box. So please do use this to ask your questions. There are no dumb questions, so don't be shy. If we don't cover off all of the questions here today, you can be sure that you'll hear from us soon after. My name is Justin, and this is Niren, and we are co-founders of BetterCo. Our core purpose of BetterCo is to help Kiwis build better businesses and better lives. We know that when you are a small business owner in New Zealand, you don't have a work life and a separate personal life, you just have one life. So why not strive to make it a better one? We know through experience that by focusing on your purpose, people, and profit, you will build a better business and live a better life. So BetterCo is a merger of Cloud Accountants, which began in 2009, and NextGen Accounting, which began in 2012. The company is jointly owned by myself and Niren, Alistair, Peter, and Vinay. And we all have the same desire to see people run successful businesses and live the Kiwi dream. So thank you all for tuning in. We know you will get some valuable information today and urge you to take notes during the process. I will now pass you on to Niren, and he will take you through the first part of the webinar. Over to you, Niren.
Cool, thanks, Justin. I hope everybody can hear me. I'm just bringing up my screen here, making sure. Cool, thanks. So thank you, as Justin said, guys, for making time today for this very important webinar. There's obviously a lot of stuff going on in your businesses at the moment, and a lot of announcements from the government. No doubt you guys all have the New Zealand Herald app on your phone, picking your notifications about all the kind of things that are happening with COVID. I guess on that point, I just can't, like, some of the stuff that's coming up from the Herald is somewhat negative. So just think about your media sources and the type of information you're reading, and just kind of make sure it's relative to you, because it's a very stressful time. So I just wanted to make that point up front. And yes, I guess we appreciate, like, these times are really unprecedented for everyone, and there's a lot of uncertainty and concern for you all. So firstly, I just want to make sure that you know that we're here for you, albeit a little bit remotely and different to how we would normally engage with you. But we really want to give you the support you need. So yeah, so some of the government support schemes that are out there, I'm going to go through them with Justin in a little bit. It's a broad overview, so if you need more detail, obviously ask questions here or sing out after this webinar. And so I just want to link this webinar back to our core purpose, which Justin just went through. So our core purpose is to help Kiwi businesses, or help Kiwis build better businesses and just have a better life. So with that in mind, look, the support is not just from the government, it's from us as your advisor. And so we want you to kind of just, keep in touch during this time. There's, like Justin said, no silly question. And we're really keen to answer whatever you're kind of going through at the moment. So make use of our time. We've got a pretty knowledgeable team. We've got 5 directors and a big team of accountants, office manager, obviously bookkeeping team too. So before we kick off into the schemes, I just want to bring this quote that our Minister of Finance, Grant Robertson, said. So he said, we need our businesses to stay solvent to help with business recovery. So I imagine everybody right now is so focused on survival mode. But at some point in time, we're going to change focus into like how we recover business. And so what we've seen from government is literally to keep us alive in business and ticking over. But this isn't the end of like government support, and we will see some more stuff to come. So we'll keep you updated with all of that. I'll just take you through our agenda here. Does that slide come up? Here we go. So the agenda today is I'm going to go through the mortgage holiday scheme, the employer wage subsidy, the business finance guarantee scheme. I've since renamed that to business finance scheme because the guarantee thing is a little bit misleading, but I'll cover that off in a second. The RBPN grants for advisory services. So that's the regional business partner network. If you guys don't know what that is, we'll cover that off. Then I'll hand over to Justin to talk more around the technical stuff, given he's the expert here in terms of technical things. So IRD Debt Relief, the tax loss carryback scheme, a little bit on landlords and leases, insolvency relief for companies, and then just reiterating our support and then some actions for you to take in terms of next steps. So here we go. So the mortgage holiday scheme is a little bit like it's exactly how it reads. It's a holiday to some extent, and so let me just take you through the detail of that. So you can approach your bank at the moment and ask them to stop your mortgage payments. And I guess the important thing around that is if you're stopping your principal and interest repayments, it is very much like it's going to be added to the back end of your loan. So the way I like to explain it to clients is literally like a holiday. So if you went off to Fiji, you have a few cocktails, you eat lots of yummy food, you're fairly relaxed, and but then at some point in time it comes to an end and you have to come back to reality, which is home. So work, business, kids, all that sort of stuff. And so it's the same thing here, is you're taking a little break, but you just need to make sure that you understand that it gets added to the back end of your loan. So I've seen deals, so you can opt for like a 6-month holiday. I've seen deals around sort of 3 months. I haven't seen anyone take a 1-month break yet, but it's important to make sure if you're going to take a break from your mortgage, the option is there obviously, but just make sure you have a plan and a reason why you're doing it, because yeah, I'll share with you an example in a minute of someone who did it and kind of having a small negative effect, I guess. But there needs to be a good plan in place, and it's useful right now to take the pressure off your business. So if you can get a mortgage holiday, then obviously you're not going to be sucking out the cash out of your business, and kind of just reduce the personal pressure. And like Justin said, we believe the business and personal kind of link together. So yeah, make use of this if it's something that you need to do. The other option, which is probably a little bit more, it's not a holiday as such, it's if you're on principal and interest, and you're paying kind of, like a good mortgage person is, and if you can afford to pay, you're paying principal down on your mortgage every year, reducing it. So most trading banks are basically saying, look, we'll stop your principal payments, but you continue to pay interest, and that may give you another $20,000-$30,000 a year, depending on how aggressively you're paying down that mortgage and the term. So just have a look at those two options, I guess. The example I wanted to use today was around a client who went for a mortgage holiday, went directly to the bank and ASB in this case, which they just obviously, if you've got a broker, I suggest you use a broker, and we team up with the broker. So advisor, broker, and the business owner, and make sure that whatever we're doing for you, there's a plan in place and there's a good reason. So the mortgage holiday that was opted by this client, 3 months holiday, but they actually had a pre-approval in place for another purchase on there. Well, basically what they're doing is downgrading their house from, let's call it a $4 million house, beautiful home, obviously at $4 million, down to $3 million. But what happened is once they accepted the mortgage holiday scheme, they lost their pre-approval, even though it was a downsize. So A bit unfortunate because ASB didn't tell us this at the time, so now we have to wait 6 months to see the business trade for another 6 months before we can apply for another pre-approval. And so I guess what we're trying to do late last year was reduce the size of their mortgage, hence the downsize. Still a pretty good home at 3 million, obviously. So that whole conversation, well, the whole thought around bringing your broker in the loop is they're going to know more about what you can and can't do, and some of the rules, because the ASB or whoever the main banks are not kind of telling you the things that you are important, because I guess they're not invested in the business and in your kind of situation as your advisor or your broker would be. So just tread carefully along that. And then just an example around interest only. So pretty simple exercise. I've done it obviously for our family. It's taken the pressure off our business, I guess to some extent, because we don't need to bring in as much money for the short term. So we may take, we're taking the next 12 months off, but there's a clear plan in place to repay the principal over the next 3 years. So we're not kind of just at a standstill. So so just make sure you are communicating with people on that, especially advisors and brokers. Where are we? Is this just clicked over here? All right, so here's my favorite one. So this is
Niren, I might just jump in there if I can.
Yeah, sure, mate. Yep.
Yeah, so we've got a client and colleague who has developed an online mortgage calculator for people who are taking this holiday or deferment and going on to interest only. So make sure you get in touch with us and we can share that calculator. I've been through it a couple of times with clients already, and it's very good. It just outlines at the end of the deferment or holiday period what the outcome is and how much more you actually will pay after that period. So it's very, very good. Yep. Back to you, Niren.
Yeah, so no worries, mate. So that's great advice, I guess. So rather than go to your bank and just say, look, I need a holiday, actually understand what those numbers look like. Justin will share that calculator with you afterwards if you need it. Just sing out. So the big one, and the first one that kind of came out really early on during this whole lockdown, was the employer wage subsidy scheme. My favorite, we're still writing or doing wage subsidy ones today. So this particular scheme is going to end on the 9th of June. So it's important to know that, because we're in May already. And so we've got all of May and then probably, and 9 days in June. So the time's ticking a little bit. It's kind of my understanding that I believe late in May, the government will have to put some more money behind things, behind businesses and us, I guess, because this is only this is only a 12-week scheme. So I think it's important to understand why there's a employer wage subsidy scheme. And so the government is giving us money to us as business owners to keep our people employed. It's also available to you as a shareholder, employee, or an employee. And I've seen a couple of cases where people have claimed for their businesses for the employees that are working, but not for themselves. So that's quite important. And if you've made that mistake, like others, then like, we can recover. We just need to figure out the process and go through that. But let me go through the breakdown. So if you have full-time workers, and you basically will get $585.80 per week for each of these people. If you have part-time workers, you'll get $350. So the idea is you have to pass on at a minimum the wage subsidy. And when it first came out, it was 80%, but they kind of they removed that as soon as the lockdown happened, because things like retail and hospitality had to shut their doors, and so there was no real revenue coming in, I suppose, and it was unfair to have to force people to pay 80%. So I guess it gave people small living for the next 12 weeks. And so it's important that these people you look after your team, you keep them employed, because you're going to want them after the next 3 months is over and things start ticking again for you. One of the biggest things that you need to make sure you've completed, and if you haven't done this and you've applied yourself, I urge you to create a work paper. So accounting term work paper just means have like a worksheet or some evidence, I guess is a better word for it, to make sure that you are showing a 30% decline. And that's compared between, so if we think about January this year to June this year, so any of those months compared to last year in the same time. So January to June last year. So if we go for April, for example, is 100K, it needs to be down by 30% compared to last year. And so if your business hasn't been around long enough to do a comparison to last year, then you can do that with another month in the year, I guess. So let's say we compare April with January, for instance, and it's a 30% decline. So you can do that based on forecast. But I think Justin might jump in here, but he's had a couple of clients or just people that he knows applied themselves and kind of got stuck because there are some audits going on and there are questions being raised around this.
Yeah,
And so if you,
yeah, thanks, Naren. Yeah, so I do have a couple of examples whereby they haven't applied under the right scheme, or they've applied as a sole trader rather than a shareholder employee. So it's just held up their payments, and we've found that if we've controlled that ourselves, then it's worked a whole lot better. I'm sure a lot of the people that are on this call have already applied for the wage subsidy, but I suppose the people that haven't, let's have a chat and we can assist with applying on your behalf. I think as Naren alluded to, you need to have that backing documentation in place because if you are asked questions and if the auditor arrives, you've got to be ready to answer those questions pretty quick.
Yeah, I agree. And so this, if you get it wrong, it's basically criminal conviction to some extent, so it's regarded as fraud. So yeah, just tread carefully on that space for those that have applied and still are yet to apply. We've still got a bit of time. I had a curly one actually on this, and so I had a client who had a contractor, and the contractor claimed a wage subsidy on, for themselves. But the idea was that they would claim the wage subsidy and we would top it up as the business. So for anything over and above it, all the hours that they worked. But this contractor got paid the wage subsidy and decided to not turn up to work for the next 3 months. So I guess in that case, true colours kind of showed. And so that person probably won't be in a job after the 3 or the 12 months or 12 weeks. So yeah, so I guess just thinking about your team there, make sure you're kind of supporting your team and showing them that you're a good employer and you want them to be around. All right, so we're just moving on to my next favorite. That slide change. Hang on a sec. Oh, there you go. Oh, too many. Sorry about that. So the business finance scheme, obviously the guarantee part. I'll just cover that off. So the government are guaranteeing the loan up to 80%. And so I think the misconception here is that people think it's easier to get this money because the government are backing it 80%. The reality is that the government are backing the bank and they're not backing the business. So the banks are probably meant to be a little bit more lenient on lending this money, but from my understanding is that they haven't been as lenient. They've actually been tighter, which is good and bad to some extent. But yeah, so it's important that if you get this money, you need to know you can afford it and you really need it, because if you can't pay for it and you fall over, the government's not going to bail you out. They're going to bail the bank out, and the bank are going to go after you. So I imagine they'll have, depending on the asset or the securities you put up to get the money, you could have a personal guarantee or like a GSA or something like that in place. So it's not going to help you if you can't afford to repay this money. So just bear that in mind, and that's why I've removed that word guarantee, because I think it's a little bit distracting. So loan details, so you can get up to $500,000, and so that's obviously a sizable amount. If you need it, get it, because it's there. You have to repay this loan over 3 years and with an interest rate of roughly 4%. We've actually seen a couple of deals in the low 4s, so 2.4% for a particular customer. I think it was one of Vinay's customers actually. So, but I think there's a bit of security behind the loan. So, I mean, this is cheap money. Like if you can get your hands on this money to get you through a tough time or a tough year, then the next 2 or 3 years or 4 years are going to be okay. But you just need to make sure that you can afford it, I guess. So the important thing is this money and how you apply for this money and what you say to the banks is very important, because I've seen people say, oh, it's for a capital expenditure, I need to buy some machinery, and basically get thrown out. This money is for operating expenses. It's again so you can keep your wages going, you can pay your landlord its rent, and kind of the day-to-day operating stuff. So you can spend some of the money, up to 5% on capital expenditure. So that might be a small car or something like that, but it has to be, it's capped at 5% and the bank will check. So just be, just make sure you understand that it's around operating expenses and not capital expenses. And so how do you be eligible for this? So you need to have a business that's turning over or done 250 to up to 80 million. So obviously the 80 million at the upper end. If you're $80 million business, I imagine you'll be taking $500,000, which might cover you for 30, 60 or 90 days of costs, depending. I mean, it's a sizable business at 80 million. Although I have seen businesses run very lean at that level. So yeah, so I guess the range is massive, right? So it's big, small and medium businesses, medium still considered at 80 mil. But if you've just hit 250, then that's great. Let's see what we can get out of the banks for you. There's certain businesses that you're not eligible for, or that aren't eligible. So believe me, I thought about taking out this money against our business to reinvest in property and do some developments in that. But this money is not for that. You can't use that. There's a different criteria that applies to property investors and developers. You can't use it for agriculture, obviously recreational cannabis, and then refinancing existing debt. So, you know, like if you've got a current debt around, I don't know, whatever the amount is, but you're paying 6 or 7% interest, you can't take this debt out to pay that and get a lower interest rate. Unless, of course, you have done a deal in, say, January, February, you know, not knowing COVID's around the corner, and gone unconditional during those months, and then settlement pushed out kind of March, April, and then gone, oh, look, you know, you've made this deal happen, and COVID's come along, and so you can actually refinance that debt. So that's a good opportunity there, because you'll probably pick up a lower interest rate. So think about that one, and it's a bit of a unique situation, but I've seen that one already. There we go. Okay, so what do you need? So here's the most important thing. Now I think this whole what do you need part is actually not just about the bank. I believe it's what you need right now in your business. And I'll talk in a minute about the funding that's available to all of you business owners out there. And the government is throwing some money at this, so they'll pay for this work, or they'll basically pay us to do the work for you. So you can have all of these things for basically no cost. Obviously, you paid for it at some point in time in your life through your taxes. But the number one piece of thing that you need right now, and the most important thing, is your annual accounts. So that's your, I mean, you all know what your annual accounts are by now, and if you don't, please find out. But so at BetterCo, we've made a commitment to all of our customers to get all of our work done by September. And traditionally we get 12 months to do that. So we're bringing all of that forward. There's actually a reward in it for our team. I don't know where we're going now because of COVID, but we were meant to go somewhere. But we'll reconsider that once we get all our work done. But yeah, so get your latest set of accounts, because that's the first thing you need to know. You need to know where your tax position is, how well you traded last year, because you know, your last year probably won't be as good as this year based on your forecast. And then the second part to that is your cash flow forecast. So yes, the bank wants this, but I want you to have it too. You need to know what your profit looks like, how your balance sheet stacks up, and then your kind of cash flow. So in accounting terms, we call it a three-way forecast. And so basically those are the three things. So yeah, get yourself a three-way forecast so you know where your money's going, and look at all the assumptions around, you know, your revenue, earnings, and your outgoings. And so once you have that cash flow forecast and the annual accounts, there's only one other piece of thing you need, I believe, and it's a kind of forward plan. So, and that might look like, we're calling it a business recovery plan or a business continuity plan. And so I think if you are part of our database, you would have received a guide earlier or late last week around what that is and what you can do. And we actually have a free template for you to take up and complete yourself. But if you don't want to complete it, obviously we'll do it for you, and the government will pay us for that. So those are the three things, the most critical things that the bank need for this business finance scheme. But look, forget about the bank. If you don't need the lending, then get this for yourself anyway, because it's going to be highly valuable information for you over the next sort of wee while. And we can continue to tweak your forecast as you move along through this unknown stage, because I guess the forecast is just the best guess. You got anything to add to that, Justin? You're good?
No, all pretty good. I'll just maybe touch on the annual accounts piece as well. It's been interesting being in lockdown. A lot of clients must be at home with not too much to do because they're really pushing us to get their year end done also, just to see their final tax position, which suits us just fine because we've got our team also working from home, so it keeps them nice and busy, and we can turn around that work real quick.
Yeah, good point. All right, so just the last piece on this kind of business finance scheme. So look, we're trying to make this really affordable for you. It's not expensive stuff. And before I go into the grant, there's obviously two other options. You can pay for the work once the finance has been approved, or you can use Smart AR, which I think a lot of, well, you should be familiar with by now. And if you're not, then all that means is you can spread the payment over 6 or 9 or 12 months at a small cost. But the Smart AR thing is slightly smoke and mirrors, because it's all kind of guaranteed by somebody. In this case, it's going to be guaranteed by us, so a bit risky. But my preference right now is to make use of the government grants that are available. So these are available to most businesses. The government's throwing 20 million at this, I believe. So, and I think there's going to be more to come. So there's $20 million there that has been paid to the Regional Business Partners Network, and that's to help. Well, basically they pay for the work that you need from us, up to $5,000. So it's all specific to region. Then I did a deal the other day with someone down in Wellington. He got paid $2,000 up front. A very kind of easy process. Now it used to be quite antiquated, but it's getting better. Obviously they have to put some effort behind it now. So yeah, so the $2,000 applies to Wellington. I think it could be $2,500 up in Auckland, and up to 5. So yeah, so you can use that money to do like a business continuity plan, the same thing as a business recovery plan, your finance management, obviously cash flow preparation. There's other things like HR and staffing issues. So if you have those sort of issues, then you can get this funding for that. And we know the best people in the game in that space. So find out who those are, and we'll put you in touch. And then just other things like health and wellness, and any other kind of sector-specific issues that you might have. But it's all there. So I'm going to commit to all of you today that I've got everyone's email, so I'm going to send you a flow chart on how to actually apply for this money. And then I want you to go and register and just go and see well, you can't physically see the advisor, obviously, but get in touch with them. But in that, there'll be a link in that email I send you and all the information around how you get this money. But look, you've paid taxes before. Look, this is a time to make use of these things and get the stuff you need from us, so you can kind of operate your business, as best as you can right now. I think so. That's me done in this first part here. I'll just chuck it over to Justin while I just have a look through all these questions that have come through, and I'll try and answer them and scan through them while Justin takes you through the next part. All right, I'll just change you over there, Justin. You got control there, Justin? You're good? I think you're on mute, mate.
There you go. Can you hear me now?
Yeah, I can hear you now. There you go. Thank you.
Yeah, thanks, Naren. Some good information there. I apologise in advance. This next part is a little bit dry, but we'll get there. Yeah, so I suppose the mental health of our nation has been in the spotlight through this pandemic. And with this in mind, Xero have put together the Xero Assistance Program. So it's a 12-month pilot program that aims to provide mental wellbeing, counselling and resources to Kiwi small businesses So this is really, really important for us at this time, is our view. So it provides confidential counselling. Sessions are available via phone, video conference, or live chat to help with work-related and personal issues. So the program is available to all Xero partners, as well as any of their clients on the starter, standard, or premium plans, their employees, and their families. So to find out more, go to xap@xero.com or visit their website. We would really encourage you and your teams to use this program if required. So IRD relief. So the IRD are being flexible with their clients, well, with our clients who are directly affected by COVID-19 at the moment, which is great. So they're offering the following. So interest remission once core tax has been paid, remission of penalties, greater flexibility with tax payment dates, instalment arrangements, write-offs due to serious hardship, and write-offs under maximum recovery. Now, to be eligible for remittance of penalties and use of money interest, customers must meet the following criteria. So the tax that is due is on or after the 14th of February 2020. So that's pretty much when COVID-19 hit. Their ability to pay by the due date, either physically or financially, has been significantly affected by COVID-19. Now, there's not many clients out there that are not affected by COVID-19, so that pretty much covers all of our clients. They will be expected to contact the Commissioner as soon as practicable to request relief, and would also be required to pay the outstanding tax as soon as practicable. So what we're seeing is that we're helping our clients put payment plans in place, and we've done quite a few recently. And as long as you get in touch with them pretty quickly, they seem to be pretty receptive. It's still subjective though, so as soon as practicable will be determined on the facts of each case. But Inland Revenue considers the term means that so long as the taxpayer applies for the relief at the earliest opportunity and agrees to an arrangement that will see the outstanding tax paid at the earliest opportunity, they should meet that request. The IRD accepts that customers will have difficulty paying all of their taxes in full and on time. However, it's important that you continue to file your returns on time. So that means your payroll returns, your GST returns, FBT, and income tax returns when they're due. So the information in these returns will allow Inland Revenue to have a more complete picture of your financial position when considering the various options for relief. So it may reduce the amount of information required to consider whether or not to agree the request for relief and the extent of that relief. So Inland Revenue has been given discretionary power to provide extension of times for due dates. So that's good. So deadlines for filing tax returns and paying provisional and terminal tax has been extended. But I think the key here is to just keep in constant contact with them. So in addition to the specific relief and discretionary measures outlined, we can work with you to put forward an application to Inland Revenue for an instalment arrangement. And as I've said, we've been doing quite a few of those recently. So it's important that you work with us so that we can get you the best possible outcome with the IRD. It's sometimes challenging and a bit nerve-wracking to get on the phone with the IRD, we've found with our clients. So we're used to doing this every single day. So do get in touch and we can assist with that. I would touch on another system that we're introducing our clients to, and we'll be giving you a lot more information about this going forward. It's called the AIM tax system. I'm not sure whether any of you have heard of this, but it's a system whereby you pay tax based upon your trade. So going forward over the next 3, 6, 12 months, there's a little bit of uncertainty of how you're going to trade. So you pay tax as you go based on how you do trade. So if you have a good couple of months, you might pay a little bit more tax. A down couple of months, you may pay less or no tax. So we've got about 30 clients on this system at the minute, and they all rave about it because it helps their cash flow. They pay more tax when they're doing well and less when they're doing not so well. So yeah, we'll get in touch with you about this system because it's working very, very well. Okay, so, and I'll just grab a drink. So the next one is the tax loss carryback scheme. So this will, this is where it gets a little bit technical, and to be fair, it hasn't gone through in a bill yet, so the detail still needs to come out. But it will enable a business to offset a loss in a particular tax year against a profit in a previous year, and then you will receive a refund for the tax paid in the previous profitable year. So the proposed mechanism will provide cash to businesses that are or anticipate being in a loss position. Hold on. Bear with me. Skip forward. So we'll need to see the fine print in the bill before we can practically help clients use the scheme to get a refund of tax back. But what I'll do now is that we've gone through this process recently with a client, so I just want to work through this example quickly, and hopefully it will start to make some sense. So this company was until recently in good financial health, like a lot of businesses. So it was expecting to return 200,000 net income for the year ended March 2020, and it had already paid 45,000 in provisional tax. So as a result of the lockdown, it's looking likely that for the next year, instead of making a profit, it will be making a loss. So they've done, the directors, with our help, did some estimates, and that was in the range of 150 to 200K. So if this company adopts the income projection for the 2021 year at the lower end of the scale, it can carry that loss back to the previous year. So it reduces the income in the previous year down to 50,000, and then they'll be able to get some of that tax that they've already paid back. So, I mean, every case will be different with this, but that's pretty simplistic, but this gives this client an idea of how much they can get back. The detail is, well, what we know so far is that it only relates to companies that pay tax. And with a lot of our clients, they pay tax at the shareholder level when they declare a shareholder salary. So we're yet to see whether there's going to be any relief for that type of client that pays it out as a shareholder salary. Anything to add there, Niren?
Sorry, I just unmuted myself. No, I think that's all good. I got nothing to add, mate.
Okay, cool. So the next part is commercial tenants and landlords. So this is, again, quite a technical area. So it's important that you contact your legal team to discuss this further. So many commercial lease agreements include a no access and emergency clause to cover the circumstances where tenants cannot occupy the premises. Now, this clause was introduced into the standard commercial lease agreement after the 2011 Christchurch earthquakes. So it means that the landlords need to assess a rent refund being a fair proportion of the rent and outgoings for the period that the premises cannot be occupied. So I think with a lot of landlords and tenants, there's been some discussions made between both, and mostly landlords are being quite fair to their tenants and giving some relief to what they are paying, but it's a little bit hit and miss. We're seeing some landlords being very generous and some being not very generous at all. So they're working together to try and come to a solution. There was also some further commentary yesterday, I'm not sure whether you guys heard, from Andrew Little, which included possible changes to the Property Law Act. Now, this includes how parties to a commercial lease would be expected to consider rent concessions in whole or in part for a period where the response to COVID-19 has had a material impact on business. So this is moving fairly quickly. So I suppose for now, with regards to commercial tenants and landlords, watch the space because there's likely to be more change coming in the near future. So insolvency relief for companies. So this is really for Companies Office and Companies Act stuff. So New legislation is underway to help companies facing insolvency due to COVID-19 to remain viable. So the relief under the legislation will include giving directors of companies facing significant liquidity problems a safe harbour from insolvency duties under the Companies Act. So company directors are not supposed to continue to trade while a company is insolvent, but the reality is that many businesses may face insolvency, so this is a practical change to the Act, which is very good. Enabling businesses affected by COVID-19 to place existing debts into hibernation until they are able to start trading normally again, which is again very good. Another one that we've been screaming for a while is allowing the use of electronic signatures where necessary due to COVID-19 restrictions. So we're finding even with our clients now, we're using electronic signature systems, and the clients are embracing that pretty well. Giving the registrar of companies the power to temporarily extend deadlines imposed on companies, incorporated societies, charitable trusts, and other entities under legislation, and giving temporary relief for entities that are unable to comply with requirements in their constitutions or rules because of COVID-19. So these are pretty good changes for companies that require it, in our view. So hopefully I haven't overwhelmed you too much with some of the technical detail. Our goal has been to share with you the huge range of support that is available at this time for small business. It's our job at BetterCo to interpret this information as it applies to your business. So what are your next steps from here? Now, clearly doing nothing is not an option. There are so many avenues of support, and we don't want you to miss out on any of these opportunities or entitlements. And like being on a plane, remember to put your oxygen mask on yourself first as a small business owner. The more sustainable you can make your business right now, the better off for everyone, including your team and the greater economy. Make a plan and get through these challenging times. Focus on what you can do as opposed to worrying about what might happen in the future. Now, this can be pretty tough. I don't know about Niren, whether you've got any stories, but the first sort of week and a half to 2 weeks, I fielded 2 or 3 calls where I had clients on the phone in tears. So we were a sort of a voice of reason and calm at that time. But at the time, we didn't know what was going to happen because it was the unknown and things were happening so quickly and rapidly. So I think talking to people, and that includes us, family and friends, is very important. We are here.
Just on that,
oh,
Justin, yeah. Sorry, mate. And so focus on what you can do. So I've had similar situations of like people not getting in touch with us, so it's kind of putting their head in the sand to some extent. And so if you are feeling a little bit of anxiety or unknown around what's going on in your business, and just focus. What you can do is get in touch with people. And that might be us, or even if you just need support people, so just talk about what's going on. And so so I guess that's what that's kind of about.
Yeah, so important for sure. Okay, so next slide. So how can we help you? So we've put forward some ideas of how we can help you, and we've tried to put some costings around these as well, so we're open and transparent. And as Niren alluded to before, there is support and funding available to help pay for some of these services. And the team, we've got a big enough team now so that we can handle all of your questions and providing these services for you. So we can help with business continuity planning and full plan reviews, finance applications to banks where required, full forecasting options for short-term and longer-term, and all IRD arrangements and negotiations. So please make contact with us after this session, and we will, of course, follow up as well. Have you got any comments there, Niren?
No, so I just want to... POA, so if someone's kind of not sure what that POA is, price on application. So there's some things that obviously going to cost you some money, but they're case by case. So just get in touch if you want us to price up any of this work where it says POA. So that's the only part. But it's very, we've made this very affordable. In a different time, it might cost you a lot more, and we're obviously investing a lot of resource and kind of expertise behind these products. So yeah, make use of it, especially if you don't have to pay for it.
Yeah, good. So we'll go to some questions now. I've got one here. You might be able to answer. Oh, I might be able to answer this one. So my business won't be able to get up and running at all until we get down to level 2. So I'm going to make a loss this year. I paid provisional tax for this last year. Will I be able to get this back, and how do I do this? Yeah, so that's the tax clawback. So yes is the answer. So definitely get in touch with your accountant or director, and we can work through that process with you. As I alluded to before, the detail is yet to come out, but as soon as that does come out, we'll be able to answer that proper. But in short, yes, we can start to do the calculation, and we can get that started for you right now.
I'll just look at so another question here around how do I access the grant under the regional business partner network? So like I said earlier, there is a clear process around this, and it used to be harder. Then, well, it's much easier than it used to be. So I'll send you a little flow chart shortly after this, or either tomorrow. And then you kind of, all you need to do is follow the links, register, and meet an advisor, tell them that you want us to do some of the work and what product it is, and basically they'll approve the funding, and then we'll deliver the services. And so no invoicing to you. We basically invoice them direct, but you just need to pick up a voucher. So I'll send that to everybody to make sure you know how you can get access to that money.
Yeah, good.
I've got another. There's another question here around the wage subsidy scheme. It's quite a big question, and probably needs a little thought to it. So I might just pick that one up after the session, okay. Just for that person who's asked that question.
That's good. Yeah, I had one as well, which was more around if I'm a company and I'm employing contractors rather than paid employees, can I claim the wage subsidy for the contractors? Well, the answer is no, but the contractors will be able to claim that wage subsidy in their own right as a sole trader, or if they're a company as a shareholder employee. So you can only claim for yourself and people that are on the payroll as paid employees rather than contractors. Is that your take on it as well, Nira?
Yeah, that's absolutely right, mate. And so it's that curly one, because I had that client who asked the contractor to claim the wage subsidy, but she obviously got paid the money and then decided not to turn up to work. So it was very out of kind of, so I guess you could expect the unexpected during this time, because she's been working there for 3 years and just didn't expect it to happen. But this whole time has changed people to some extent. It's a bit stressful. So yeah, so I think just open, honest conversations with your contractor staff and your team will go a long way as well. I've got one other. Oh, you got one, go, mate.
Yeah.
Oh, so this one's just around. I don't need to apply for the business finance scheme, but do I need a forecast? So yeah, I think you do, because if you don't have a forecast, you don't really have a plan. And so how do you know how to achieve a target? So I guess the way we would do a forecast and the way I work is go bottom up. So look, I might go, if you want to make 100 grand or 200 grand profit, we start there and work our way up through to the top line, and the top line being how much money you need to make, so your revenue. So if we find, oh, you need to make 1.2 million or whatever it is, we'll put some assumptions around that, and then a clear plan every month around what actions you need to take to deliver those numbers. And so without a forecast, you really haven't gone through the thought process, and then you haven't really set any KPIs around achieving. So you can wing it, or you could create yourself a forecast and be better off. So that's the answer to that one.
Yeah, I totally agree. And I think because there is this funding that's available out there at the minute, you know, our clients, being you guys, should be making the most of the opportunity and getting access to this funding so that we can assist you with your cash flow forecasting and planning. It's available, so we may as well use it, is my view.
Yep.
I've got
There's a few
one.
other ones there if you want to go through them.
Yeah, I've got one here which I covered off really, is that are there any other tax payment systems available that can help us as small businesses? Well, yeah, as I alluded to, the AIM tax system is for you. It really is a no-brainer in my view. Paying tax based on how you're trading throughout the year just makes perfect sense. It'll help your cash flow, especially if people are in the provisional tax regime and they know that they're not going to make as much money this year as last. You may as well just pay the tax as you go through this system based on your trade.
Yeah, there's quite a number of wage subsidy questions here, so I just won't be able to get to them in this session. So we'll reach out to you separately around the wage subsidy because they're quite unique to your situation. There's one around rent relief. So again, like Justin said, there were some announcements yesterday around that, so we're yet to find out more on that. But if you haven't already spoken to your landlord and negotiated a rent reduction for an agreed period of time, albeit a payment that you don't have to make, or so let's say if it's 10 grand and they agreed to take half off this month, but put it onto the back end of the next 18 months or whatever, or just give you half off altogether. If you haven't done any of that, then you need to start having those conversations pretty quickly with your landlords. The reason, so the government actually have given landlords the ability to depreciate their assets now by 2%. So that's going to be a tax benefit and savings to the landlord or the property owner, which in turn is not to save them taxes, to pass it on to you small and medium business owners. So it's a bit cheeky if they take that benefit and not give it to you. But so I guess we can arm you with the things you need to know to go and have that conversation with the landlord. But look, I've negotiated up to 50% off for 3 to 6 months already. So you just got to push it pretty hard. And if you want to go harder, then take legal advice on it and go down that route as well, like Justin said earlier.
That's the way. I've got one here. Are you aware of any funding relief for clubs and not-for-profit organisations? I don't actually know the answer to that one. Do you know? We might have to look into that one.
Nah, sorry, I don't know the answer off the cuff either, mate. So we'll check that one out and come back to you.
Yeah, definitely. And there's another one here. Yeah, there's quite a number around the wage subsidies. So as Niren said, I think we'll come back. One said here they may not be down 30%, but they may be down 25%. I think we've got to remember that it's any 1 month. So it runs from January 2020 through to June 2020. And you compare any 1 month with the previous year. And if it was down 30% and it's COVID-19 related, then you qualify in any 1 month. It's not over the whole period. So the team, when we were applying for our clients on their behalf, we made sure that we did those calculations and we've got that on their file. So if you need us to check for you, then just get in touch.
Yeah, and just further to that point is you need to just at least have a forecast showing that you're going to be 30% down and have that somewhere. So get in touch around that one, because that's, yeah, there's something to be looked at there for you.
Sure, we've kept.
Well, I think we should leave the questions there unless you've got.
Yeah, well, we've kept it to just on an hour too, which is pretty good. So, yeah, as I say, we've got a list of all of these questions, so we can come back to the people that have put those up if we haven't had a chance to reply.
Yeah, perfect.
Yeah, but yeah, thanks for making the time to attend the webinar. We appreciate that your time is very valuable right now. So coming along and being a part of this has been great. Have you got any final thoughts there, Niren?
No, same token, mate. It's obviously pretty hard to find time in amongst everything you're doing at the moment, especially if you've got kids and all that, and your partners, etc. So thanks for listening in, and jump on our website if you haven't got our contact details. They're all there, and yeah, keep in touch.
Very good. Thank you. There'll probably be a little follow-up straight after this webinar. So if you can answer the questions that are sent through, then that would be great. But we'll follow up very soon as well. But thanks for attending, and we'll be in touch really soon.
Cool. Thanks, guys. See you later.
See ya.